Hi, what's up, guys? Today we'll talk about of 8 the best tech dividend stock to buy. Okay, let's start. With investors profits, this tech dividend stock should be winners. There are a common misconception that there is a trade-off between growth and income. Either a company can produce strong capital gains or it excites promptly to pay dividend. However, there are supplies large number of technology companies that pay solid dividends and given to shift in market wins over the past year. These tech stocks with dividends should be opportunity going forward. Right now, investors are focused on campaigns in profits and cash flows rather than more speculation. Growing investment as tech campaigns with strong profitability and healthy dividend policies should be a sweet spot for investors in 2023. These campaigns should stand out within tech sector over the next year. Okay, next, Broadcom Inc. Broadcom is a massive American semiconductor company with 20 employees and more than 32 billion in annual revenues. Broadcom is already a demanded mover and shaker in its industry. The company aims to grow even larger as it hopes to acquire Webimer Inc. in a mountain 61 billion deal. The deal, along with the possibility of antitrust regulators blocking it, has a date near term opportunity to the Broadcom story. A look at the bigger picture shows that Broadcom has an invital business in leading semiconductor categories such as system on a chip and embedded processor and controls, and with share constantly trading at just 14 times forward earning, along with a 3.1% dividend widely. There is plenty of value here to compensate for the near-term headline risk around the bank we may excellently. Kisco Systems Inc. Kisco Systems is a domination player in networking equipment. The films was one of the hot stocks of the 2000 dot-com boom. While comms have come down dramatically since that point, internet data usage has continued to grow by leaps and bounds. Benefits Kisco tremendously. In fact, Kisco new generation more than $15 billion per year in revenues and immense fat profit margins on those sales. Kisco brought in a total net income of 11.5 billion in the 12 months ending on October 31, 2022. This ends up amounting to a prices in rates of just 7. On top of its fantastic profitability, Kisco has an excellent balance sheet with nearly no net debt. This allows the company to pay a 3.2% dividend while also buying back millions of dollars of stock every year. Network gear may not be cutting edge number, but is it still essential? And Kisco's holds over the space remains fields. Texas Instrument Inc. Texas Instrument is the worldwide leader in analog semiconductors. This type of chip turns real-world innovation such as weather condition into data that machines can interpret. Texas Instrument is enjoying a big growing market is in Smart vehicles, for example, which need multiplayer sensors and devices to interpret the physical condition around them and not analyze semi-condition, are also attractive since they tend to have longer production cycles, more stable sales volume, and more limited competitions that firms typically see in the rest of the semiconductor industry. Analysts expect a strong decline for the company, but there is supposed to be a downturn in 2023 due to excess inventory at present. Texas instrument put this first to rest thought with its fourth quarter earnings releases where both revenues and income comfortably topped expensive. The stock pays 2.8% dividend. Okay, next. Qualcomm Inc. Qualcomm is a leading semiconductor company focused on telecom equipment. The firm built its business on patent and intellectual property supporting 3G and 4G mobile telephony devices. Qualcomm is an integral player in the 5G mobile rollout. It has also developed its own chipsets, such as Snapdragon, which can power high-end phones and tablets. Qualcomm stock sold off substantially over the past year amid a slowdown in the semiconductor industry and delays in the page of 5G reloads in some markets. The short-term nervous use in understandably expensive if recently happiness. However, there's little doubt that Qualcomm will generate plenty more value and innovation for its clients in coming years. In the meantime, even with the cloudy outlook for 2023, Qualcomm stock is selling for just 11 times forward earnings and pays 2.2 frozen dividend. Entertainment business Machine Corp. Many years ago, IBM was one of the world's most dominant computing firms, but the company largely missed the transition from mainframe to personal computers, getting the pivotal operation system market to Microsoft Corp. IBM has missed out on many other key technologies innovation science while many investors may see IBM as a company for past its prime. The firm's situation is no better than most people application. IBM just started its slowest moving business with the recent Kyndryl Holding Inc. spin-off. Meanwhile, IBM's revenues bottomed out in fiscal year 2020 and the company has now returned to top-line growth with its investment is cloud company and artificial intelligence starting to pay off. It seems like IBM has turned the corner. Shares also yield a generous 4.9%. Okay, that's all. Goodbye.